Good afternoon, everybody. Wagner Nolasco here from Build to Rent Direct, and I am not even allowed to steal his thunder. We have two great guys here. We have Graham Parham from Highlands Residential Mortgage and Aaron. So I'll let you guys introduce yourself, but thank you very much for accepting the invitation of being here today, guys. I really appreciate it.
Thank you, Wagner. It's our pleasure. I'm happy to be here. I'm also a client of yours, of course.
Yes.
I can't keep up with how many properties you sold me, but it's been fun. It's been great. And I've enjoyed working with you and your clients. So I'm looking forward to talking all about it.
Thank you so much. This is amazing. Thank you so much, Graham. The pleasure is always great to have you. We speak on the phone almost every week, so this is really exciting. And Aaron, tell us a little bit about yourself, my friend. Welcome.
Yeah. So I've been with Graham for coming up on 7 years now, doing anything and everything kind of related to mortgage and investment properties. So really excited to dive into all this. And once again, thanks for having us on, Wagner.
Fantastic. So, if you're not watching this live, this is going to be available on our YouTube as well, in our customer relationship management page as well for you guys to watch. This is a partnership that was actually created with the investor in mind, and Highlands Residential, the Parham team, and Build to Rent Direct. We actually came to a conclusion that it's really, really important for us to actually try to divide this into parts for you guys so you can understand what the buying process is, what the properties are actually looking for on the Build to Rent Direct side, as well as can we get financing, what's the market look like, and how can we actually help you collectively. It's really important to disclose that Graham Parham and the Highlands Mortgage Residential and the Parham team, they don't make any commissions from Build to Rent Direct, and we don't make any commissions from them. This is a simple partnership relationship to serve you, the investor, the client, with the best product available on the market, because you may go to your local bank and you may actually have the relationship, but not everybody knows how to operate and how to approve and fund loans for investors. That's why this is really important when talking about when you're building your portfolio, what do you need? What do you actually need to look for? And that's why I have those two amazing guys here today to really explore in depth what are we doing. So let's advance a little bit on the presentation here, guys. And very, very important, right? When you talk about Build to Rent, which is a fairly new concept, but it has been happening for a long time. We actually are in Orlando, Florida. Our company actually has developed over $600 million, close to $700 million right now of delivered products. But we have close to $600 million more worth of properties coming live. This on my right-hand side of our screen is a little bit about what we actually are sharing with you. It's close to 3,000 units coming live. I actually have a great client here as well, Graham, which his name is Tim. I'm not going to disclose his last name for his privacy, but he actually purchased 3 properties recently from us as well. So thank you for being here and watching our webinar. But this is what we have. We have close to 3,000 units in the beautiful Sunshine State coming live for you investors only. And there's nobody better in this beautiful market of the US of A than Highlands Residential and the Parham team to actually assist. So we're building single family homes, quads, duplexes. We're actually investing into some actually apartment buildings, actually where we're actually stabilizing first to sell. Sela Vista is one of them. Manu is another one of them. Talita is another one of them. But we have several of them coming live, close to 1,000 units of actually multifamily coming live. But let's get to the meats and potatoes, because today we're going to be talking about a 413, which just converted. We just got an upgrade from the city to converting to 419 single family homes. We're going to have a mix of 3 bedrooms, 2 bathrooms, and 4 bedrooms, 2 bathrooms. If you purchase this property on Benna Oaks, you probably know that I have purchased 2 properties there as well, 2 houses there. And we actually are starting with the first phase of only 3 bedrooms, 2 bathrooms, 2-car garage, block construction, tenant resilient for this first phase of the project. The 4 bedrooms are going to be included only at the last phase of the project. But the reason why this project is so special for us is because people keep asking us, can I use conventional loan for Benna Oaks, for a build to rent community? What are the advantages? What are the problems? Can we use Fannie and Freddie loans? So I have the guys here today that really understand that side of the business to help us clarify any questions that we have received in the past. So Benna Oaks is about 13 minutes from downtown The Villages. We have Haagen-Dazs, which is my favorite ice cream. We have all the great restaurants there. We have live music every afternoon. And I have done a video exclusively in Ocala, and you're going to be actually be able to see that on our website as well. So Bena Oaks is actually what we're going to be talking about today. Location is amazing. It's really well located. It has just mentioned to you guys about 13 minutes from downtown The Villages, which is the fastest growing MSA in the country for 2021. Really, really important, right? You gotta need the jobs to have good tenants. Like Grant, for example, he purchased some houses in Poinciana, Florida. And I'm not sure if he knows, but Neo City has announced that LG is investing over $1.5 billion in the expansion, and the appreciation and rents there are just skyrocketing, right, Graham?
They are. I've been pleasantly surprised. Well, we've now creeped over the $2,000 mark in rents, and that's for a 4.2 now. But I haven't done that in all my inventory, so I was pretty excited to get that, and that was just recently.
Yeah, and we've been talking about this amazing Neo City for about 3 years now, that it's coming, it's coming, it's coming. And they had already acquired the land and signed a contract with the city and the economical development team, but they are actually now unbelievably moving forward with speed and construction, and houses there right now are just skyrocketing. We can't even make them cash flow anymore. So good for Graham that he picked up all the amazing properties when he had availability. This house, as I was saying, everything we sell is concrete block construction. It has a 2-car garage minimum. It has either vinyl flooring or tile flooring, granite countertops. We have the ceiling fans in place, LED lighting. We have blinds. We have all the appliances to be stainless steel. Really important. We think about the tenant and the investor in mind when we design our product. Really, really important. This is a little bit about the cash flow. Rents in this area are absolutely higher than this. And for you guys that love Zillow or Realtor.com, I have just closed a property in that area about 2 weeks ago, and the address is 735 Marion Oaks Manor in Ocala, Florida. 735 Marion Oaks Manor in Ocala, Florida. You guys can Google it, can Zillow it, Realtor.com. I have rented this property in less than 1 week for $1,700. So just to give you a little bit about, I like to show what we do as well, so you guys can do your own research. And the rents in this area is just skyrocketing. So what you're going to see on our cash flow sheet is not even compared to be conservative. It's going to be ultra, ultra conservative, because we have already seen on the market what's happening in that area. Rents are really following the appreciation on the properties. And, it's just amazing. I purchased 5 houses in Oklahoma, myself in Ocala. I got 2 in Bena Oaks, so I can't wait to start making some of this beautiful cash flow as well. I mean, all of this is available through Highlands Mortgage, as well as the Parham team. If you need a copy of this presentation, we can send it over to you, or Build Your Rent Direct. So feel free to ask us for a full set of the presentation, and we'll gladly share with you. As I had mentioned before, we actually go by the market and we actually show you what we are, where we are. So this is some of the recently sold properties in the area. Remember, this is April 2021. We're now in November 2021. So those sales prices are ultra, ultra, ultra conservative. If you take a look here, this property that sold for $220,000 was sold on 4/23. This property that sold for 225 sold for in 4/28, 2021. This one up here is a 2-bedroom, 1-bathroom, and actually sold on 4/8, I believe, as well, if I remember correctly. This is all from the MLS. If you guys don't know, this is what the realtors, brokers actually go by to gather information. And this is all real deals that have closed, as you can see. This is all from Stellar MLS, which is our MLS in the state of Florida. Really, really important. So when we're talking about a $225,000, $239,000 for a property in this area, you're actually paying a lot less than what they will appraise today. Not even saying when the property is going to be ready and available for you to move in. But please, again, we're not giving any advice as far as investments. We're not licensed. I'm not a mortgage broker. Graham is. So everything here, guys, do your own due diligence. Very, very important. We give you the information. You guys go and really make it happen, right? Carissa is going to be a property across the street from Bena Oaks. And I've been talking about quads for this whole time. This is a 264 door quad community. This property as well has a very important component, which is actually a commercial component right in front. And we're in final stages of negotiation with a very large supermarket chain in which we are under NDA. We can't disclose to you guys who they are, but just to let you know that, it's coming. We don't have prices yet for Carissa, but I want to talk to Aaron and Graham today to see if this is something they would be able to finance you guys. The whole purpose of this exercise today is what's happening on the market, where are we, where do they see us heading, but most important, how would it actually look for them to finance a property for you guys during those circumstances? Quads, single family homes, townhomes, what are the terms? Can we get this finance, right? Because we've been having a lot of questions. Can we get those financing communities? So I'm gonna let the guys talk about it. This is what we actually anticipate the renderings of them being for the quads. It's gonna be beautiful, two-story, absolutely gorgeous, extremely contemporary, which for the age group that we're actually catering is really what the product that they're looking for. Again, not final prices yet. We still haven't launched them yet, but here we go. This is what we predict the market price is going to go today. This is some of the cash flow. We'll be more than glad to share some of the presentation with you guys. So I'm not going to work too much on this today. A little bit about what we have sold in the past. And let's get to the meats and potatoes while we're here today. So Graham, Aaron, I have a lot of questions for you guys, but can you please just touch a little bit about how many loans do you do? Who is Highland Mortgage Residentials and who is the Parham team? And can you guys share? I think a lot of this is already on the screen, but can you guys just cover a little bit more in details before we get to the questions? Or if you guys have any comments regarding the properties that we just saw, please feel free to make any comments or suggestions.
Well, a little bit about our company. We're privately held. We're based in Dallas, Texas. We're about a $4 billion company. Seems to be the most recent numbers. We did that consistently for the last couple of years. My team, last year we closed about 110 million, I believe it was, for a little shy of 1,000 units. We're probably on track to do the very same this year. My team is encompassed with several individuals like Aaron and others that we have a well-oiled machine, in my opinion, that, from soup to nuts, Aaron kind of monitors the whole thing. I'm just the guy that gets on the telephone and acts like I know what I'm doing, but I really do. And I express myself because one of the things I do share with all the clients and all your clients is that, I do have skin in the game, and Aaron's starting to do the very same thing. So we understand what the client goes through. Even the first time buyer, once they dip their toe in the water, they recognize that it's easy after that. But the industry is doing very well. We went through a little bit of a hiccup, if you will, during the course of this year. The Treasury, in conjunction with FHFA, which monitors Fannie and Freddie, they decided they wanted to throttle back on the number of loans that the originators will do on an annual basis, which made no sense to anybody. So for about 6 months there, all of the industry was struggling a little bit to supply, all the loans to all the investors that are still wanting to buy investment properties. And we managed to make it work. Then, what was the date on that, Aaron? I always have to reference you on that
September 15th.
September the 15th, they decided, the Treasury and the new person that's running the FHFA said, yeah, it really doesn't make sense. So they took away that. It's back to business as usual. The rates got better. As far as the rates themselves, they're still holding very strong. We are starting to see some inflationary figures that has a tendency to push rates up just a little bit. I'd say in the last 6 weeks, we might have moved to maybe an eighth, maybe a quarter. I'd say in between those two, but it's not a whole lot of movement. I suspect we're probably going to be relatively flat for the rest of the year, but that'll depend on those inflationary figures. But I mean, as far as the rates are concerned, we're still in the threes, and we on the 20% down, we barely creeped into the four, right at four actually, but we're still in the threes with 0-point pricing, which is great. On the single family stuff, we're probably with a 25% down, running about 3.625 with no points. And on the 20% down, we're running right around 4 with no points. The quads that you're talking about, the 2 to 4 units, they're right at, that does require a 25% down mandate. So we're running about 3.625 to 3.75 on those with no points. So it's Katie bar the door. Just tell me how many you want and we'll tee it up.
So I have a lot of questions here from our listeners and people that are
Sure.
investing with us. So I think the first one that I had, and I'm sorry, I really wanted to go in order. So some of our listeners that have requested those questions can probably relate to it. But how's the mortgage market? I think you just replied, right? If I heard you correctly, from my position here is it's stable, right? Until the end of the
Very
year,
stable.
probably going to be very stable.
Yes.
Not a lot of raises on the interest rates. And as you had said, I mean, below fours, it's crazy. It's a great deal. It's probably, would you say it's the lowest rates that we have for fixed 30-year fixed in the past, 50 years, Graham and Aaron?
Well, during the pandemic, we actually did hit a new bottom. 03, we hit a bottom, and then we hit a new bottom last year. Those rates have gone. So we've kind of come off that bottom, and where I just discussed is kind of where we are, which is our still very good rates. I've been doing this for 24 years, and some of my veteran investors that have multiple doors, one of them said in particular, anything below 7% on investor rate is still a good rate, and that's still true today. But people that are just getting into the business, that are spoiled from the pandemic rates and these 3s and these 4s, and if you say 5, they freak out and run. Don't, because the numbers still work. So don't worry about the rates.
I think you said it right. When you look at the rates, they represent so little towards your cash flow because you're talking about a 30-year fixed.
Right.
It's not like those are going to be arms, those are going to be balloons, those are going to be something that you have to worry about it, right? And it's the biggest leverage against inflation, guys, is to have that 30-year fixed. That is right there. It's really what you need to have to make that whole leverage against inflation more effective. You're actually predicting for 30 years what you're going to be paying today. And if you guys know, I was just seeing this. 50 years ago, Disney World just completed 50 years this year, and they did a market comparison on ticket prices. So 50 years ago, a ticket for Disney World was $3.50. Today is over $170. So it's over 3,000% increase, way over 3,000%, but they were actually comparing. And we are actually, some people believe we're not having any inflations, right? It's crazy. So locking in the rate at today's rate at a 4%, it's amazing. Those are not going to be here forever. So the market is very stable as per my understanding. Now is the time to lock it in. Now is the time to buy. If you can get a property from us, you can. Actually, you just described as well our interest rates. So that was the question number 2.
Well, one of the things I've always said, Wagner, is leverage is your friend. Use it.
Yes.
Okay. And every one of my properties has leverage on it. I'm a 25% down guy across the board on single families, and that's my sweet spot. But one of the things I do know that's going to move in the future is rents, taxes, and insurance. But that 30-year fixed rate is going to stay solid for 30 years.
You can't beat that.
Can't beat that.
You can't beat that. You're absolutely right. I was going to ask you, how do you forecast the market? So I think you guys already did. And if you don't mind just stating that again, do you foresee any big changes before the end of the year or for next year? Or
I really don't. I think, once again, I think the market's stable. I think it's a healthy market. Fannie Freddie is not coming out of conservatorship, so we'll still be ran by the government, and the profits are good. The administration likes those profits, so they're going to keep us out of conservatorship, in my opinion, for at least the next 4 years. I do think our administration is a believer in real estate. They're focusing on the low to moderate income focus right now. But I think, we're going to see some really good things in the next 2 or 3 years.
I couldn't agree with you more. I'm not a financial expert, or I'm not an accountant or a CPA, but as an investor, I can't agree with you more. I think this is definitely not going to be here for long, and really have to take advantage. Just like the 1031 exchange may not be here. Nobody knows what's going to happen to what the taxes, incentives that we have for investment properties, Fannie and Freddie loans, fixed for 30 years. Nobody knows what's going to happen, but now is definitely a good time to secure them. I was gonna ask you, you already told us a little bit about, your size, how big is Highland Mortgages and actually what the Parham team. But, I was just gonna ask you again, how many loans do you do a year? What's the volume? And this year so far, you have done over $100 million, correct, or last year?
Yeah, I think after last month, we'll be around 110. The units we're probably gonna be around 800 right now, Aaron, maybe a little over.
Yeah, roughly like 800.
Yeah, so we'll probably be just shy of 1,000 a year, but
That's amazing.
yeah, but I mean, we're the way our system is set up, it's so well oiled, it really is. And I don't mind sharing that with you because I'm sure a lot of your clients will want to know about that. But actually, I'm gonna turn that part over to Aaron and let him explain the whole process, soup to nuts, of how we get the loans and process them and all that.
Yeah, absolutely. So yeah, that's where I was going to say I'll kind of jump in and run point here. So like both Graham and Wagner said, while we do the occasional primary residence and do second homes as well, the investment property is really what we kind of live and breathe here on our team. And like Graham said, we're active investors ourselves, so we fully get the model. The great thing about Highlands is everything from our processors to our underwriters to our closers, everything is in-house. We have the same team, the same group of guys and gals who recognize what goes into an investment property, going through every single one of our transactions. So it's a model that we understand, our underwriters understand, and when it comes down to qualifying for someone for that, we like to make it as easy as possible for that borrower. That way they're getting, they come through us and they're back to Wagner and they're back to shopping, as quickly as possible. So what that all starts with is just a quick online application link. It takes 5 or so minutes to complete. And we don't ask that you give us your life story on it. We just want the blueprint, the basis of everything we're going to look at to potentially qualify the individual. What that really involves is 3 main categories. So once we get that application in, we're looking at credit. We're pulling your hard credit pull. That is going to be valid for 120 days. So it's not something that we have to go and update routinely. That is going to be good for us for 120 days. Outside of that, we look at your assets and we look at your income. So credit, assets, and income. Once we examine all those, typically it takes us about 1 to 2 days. So we get your application in, we'll send you out kind of the laundry list of items that's going to be needed, all just Fannie Mae required documentation in order to confirm what we call the pre-approval. We do pretty much a full underwrite of that pre-approval. That way, once you send in everything, once we let you know, hey, you're good to go with the Parham team, we've got your financing secured, go find your property. There's no surprises, no, we go sign the contract and then we go into underwriting. We do a full review of everything. So once you get to send that required documentation up front, which is just going to be, asset and credit documents like pay stubs and W-2s, things of that nature. As soon as the borrower gets us that documentation, our team is going to review it, have an answer back to them in 1 to 2 days. And if everything looks good, we've got your pre-approval out, you're good to go. At that point, the borrower is property shopping, going to find that contract. If it's a new build, we do want the property to be pretty much fully completed before we step in and do our part. We have to have essentially a finished product in order to lend on. So in a lot of cases, we'll have them pre-approved. They'll go sign their new build. 4, 5, 6 months go by, they're building the property. Once it's about near completion, they come back, we tee it all up, get it going, and we're closed in under 30 days. So, with it being investment properties, we really do understand it on our team. And the whole goal for us from start to finish with Wagner and the title companies who we work with, repeatedly, is just make it as smooth as possible for the buyer so they can focus on what matters, the cash flow, looking at all that good stuff. And doing it, Graham's been in it, 24, 25 years now. I've been with him 7 years. And we really do think that we have it down to, a real nice art, a real nice practice where it makes it very easy for the borrower to be ultimately pre-approved.
One of the things I'd like to share in that is that we keep a strong communication back and forth with Wagner's team. Where are we with the build? When are we going to be ready to order the appraisal? All that. Mm-hmm. So we don't delay, but we're right there on time. And so we get the appraisal, we'll get the title work, get it all to come back in. We already have your docs, just throw it in underwriting for a quick clear to close. That is if the appraisal comes back as is. That's one of the things on new builds. A lot of times it's a 2-step process. We'll get the appraisal done probably 30, 40 days prior to completion. There's always something that may not be completed. Maybe a driveway's not in, or some bushes not in, or something small. And the appraisal will say, okay, the value is this, which is pretty much right there or more than what you contracted for. And then we'll say, okay, we'll send out for a final to make sure everything is, 100% as is. The good thing about it is we don't have to have the CO, which is what all the builders are required to have for us to close. So, a lot of times at the end, they're scrambling to get the CO. We say, we'll go close it anyway, which is a great deal, right? Am I right, Wagner?
You're right on it. And I just want to add something that really makes a big difference for us, right? As builders, developers, and as well as part of your team. I see that every step of the way that the client actually accomplishes, they get an email with a little update, right? So the communication is absolutely amazing from you guys. And by my personal experience, I haven't seen that from anybody else. So the level of transparency on the whole loan application from Graham and the level of depth that we work together in our teams to get to that finish line is huge. We actually do a 2-step appraisal process when we have to, right? Just to speed up the process, not to have the appraiser actually waiting because we appraisers right now are really hard to contract and to get them engaged. Sometimes we have to do a appraisal initially, and then they do a drive-by to get the property actually financed. So Graham, his team, our team, we're not here to make it harder. We're here to make it easier, and we will do whatever it's necessary for you to get your house sooner, so you can start renting, making that cash flow, and not waiting for the little BS, as Graham had very well said on his position there. So this is really important. We are a united team with one goal, which is to serve you and to make sure we close on your property. Graham, the next question was actually about the programs. I think they're right here listed, so we can probably cover some of them, but here we are. We have 1 to 6, and maybe you guys want to talk a little bit about the programs and the minimum requirements you have for investment loans, especially conventional financing. And if you may as well, just compliment a little bit about, if I have an LLC and I want to do it under my LLC, what are the terms, what are the conditions? I know you guys do an array of great stuff, but maybe let's go on the conventional for Benna, for example. Can we finance with conventional, and for the quads as well? Can we use conventional Fannie and Freddie loans? Can you give us a little bit of flavor on that?
Yes. As this conventional financing guideline indicates, we can do a single family residence with a minimum down at 20%. And then on the quads, or the 2 to 4, that's a minimum down at 25%. On the investors that are just getting started off, the loans from 1 to 6 loans, I mean, the minimum credit score is 620. And then from 7 to 10, it is a hard stop. You have to have 720 or higher. And what's interesting, Wagner, Aaron and I ran a report for the last 2 years, actually, and we look at the average credit score for our borrowers for over, let's just say 2,000, 3,000 borrowers. Our average credit score was 772. So we know the kind of clients that you have. Meeting these thresholds is not a problem. One of the things that I would like to share, and we get this from time to time, when it comes to products, your preferred product is your 30-year fixed rate. From a pricing standpoint, from cash flow, everything. A lot of times people say, well, let's do a 15-year because I want to pay it off quick. You can, but we're in an inverted market, and the 20 and the 15 and the 10 are actually priced the same as a 30, but you end up having to pay points, which is crazy. So we haven't sold those 15-year products in so long. In the owner-occupied category, it's different, okay? In the jumbo category, it's different. But on the Fannie Mae investor loans, it just doesn't make sense to do anything other than the 30-year fixed rate. And now with some of the guidelines over here, we have no prepayment penalties. We can allow for HELOCs for the down payment and closing, but not reserves, okay? Right. Your reserves can be 401ks, IRAs, anything non-liquid. We honor up to 100% of that. So a lot of times people do kind of freak out a little bit. I don't know if I've got the reserves. Well, you have a 401k? Well, yeah, then you should be fine. So don't worry about that. But HELOCs are great. I love them. I've got 2 myself. I use it as a working tool for down payment and closing costs for projects, and I'm paying them back. So if anybody would love to get a HELOC, don't call me, because I'm a first lien lender. Some of your credit unions and some of your smaller banks are great places to get HELOCs. I highly recommend that you get them. Now, as far as the some of the guidelines continuing on here, the gift funds are not allowed. Okay, let's say son graduates college, dad's got a portfolio of 40 properties. Son, I need you to go out and buy a property. Fine, here's $50,000. Well, thanks, Dad. He goes and calls me. He says, I want to go ahead and do a loan. I'm ready to go, and his credit's good. His earnings are good. And then I look at his $50,000 deposit. Where'd that come from? Well, Dad gave it to me. No, you can't do that. It's not in that. So what you do is you deposit that 50, you call me back in 2 months, which is considered a seasoning, and then we're good to go. So keep that in mind. Revocable family trust, we do that all day long. Just send us a copy of the trust, let our attorneys review it. We can fund a loan in a family trust as well as your individual names. When it comes to entity vesting, LLCs, S corps, limited partnership, anything other than a revocable trust or your individual names, Fannie Freddie does not allow for us to fund the loan in there. Now, that when you're working with me, you get 2 hats. One is a loan officer and one is an investor. My investor hat is now going on. What I do personally, and 99% of my clientele will do, is they'll go ahead and fund the loan in their individual names. They'll wait about 4 months. And the reason why they wait that time period is because once we fund the loan, we sell this off immediately to the secondary market, Fannie, Freddie, you name it. And once the individuals are buying these loans, they'll go back and do their due diligence. They'll, in essence, re-underwrite the file, make sure everything is in order, run their reports. And then once they're satisfied with the purchase, then they'll set it up the servicing system. You'll start getting invoices. Once you start getting those invoices, then what I do, as not recommendation, is I will get my deed of trust and my LLC documents. I'll send them over to an attorney or an escrow officer and have them retitle it into the LLC. And people are saying, well, wait a minute, what about this due on sale clause? As Aaron says, I've been doing this for 24 years. I've made this speech. If I had $1 for every time I made this speech, I'd have a lot of money. But I have never seen a note being called due. You stop making payment on a note, they'll call it. But other than that, they just want their money. Is it recommended that you pick up the phone and call the service and say, hey, guess what I just did today? Not necessarily. So it's one of those legitimate illegitimates that happens all the time. And one of the Fannie Mae guidelines that came out about 1.5 years ago, in so many words, they just kind of say, we kind of understand what the investors are doing out there.
Yep.
It's okay. In so many different words. So that's all I can say on as an investor. Okay. Foreign nationals, we do not do foreign nationals. We do obviously U.S. citizens. We do green cards, and we also do visas. And there's a lot of individuals that we do work visas on that are coming from third world countries that are working here domestically, typically for a lot of high tech companies. Now, also we work with individuals all over the world that are U.S. citizens and they're filing U.S. tax returns, but they may have an assignment in China or Japan or wherever. The biggest challenge that we've had in the last 1.5 years is getting them to get the documents signed with a notary, because all the embassies and all the consulates were closed during that time period because of COVID. We managed to get through it with some power of attorney workarounds and some other things. But the great exciting thing about that is we're about ready to launch within the next 30 days, a full e-sign process,
Wow.
which means that everything will be Zoom.
Wow, that's amazing.
It's exciting. It really is. We're going to be one of the first to the party. We're so close. It's ridiculous. We're 99% there minus one document. I said, no, I want 100% before we go to the dance. And so they guarantee me they're going to have it in the next 30 days. So the people that are all over the world, even the people domestically, you don't have to go to the title company. You don't have to do anything. You just log in. There's an individual on the line, typically somebody from an unauthorized dealer of sort, or not a title company. They watch you sign, you click off on it. It's real easy. And all you got to do is wire the funds to the title company. It's a done deal. So we're
Wow.
really excited about
Can
having
you
that one.
imagine how much that's going to change this industry overall?
Oh, it's going to,
huge.
you know, half of Aaron's job every day is running down mobile notaries just to make sure they show up at somebody's place of business or home on time. That's huge challenge.
Right.
And
All the
then,
mobile notaries going to offices, COVID, actually, some of the states, that's a problem we had. Some clients of ours, they didn't want to sign the documents with a mobile notary because they were not comfortable because of COVID. So this is a game changer.
Absolutely.
I'm so glad you guys are doing this.
And we got to wait for the mobile notary. Are we going to make sure the mobile notary makes it to FedEx on time so the title company can get the stuff the next day? So we can fund. This way, we're funding right there on the spot.
That's going to be an industry changer.
It is.
I'm so glad you guys are very ahead of this and really moving forward. That's fantastic.
Really is. Oh, it's I can't wait. So next item on the list, 1031 exchanges. Those things are falling from the sky right now. I just completed 3 this year. I'm selling another one here in 2 weeks. So I'll be back in, which reminds me, I need some product, by the way. So I'll be exchanging into some new product here after a couple of weeks into a new exchange. So one of the things I encourage you on all exchanges is that, once again, I'm going to refer back to one of those bullets on the list about the LLC. A lot of people that have had investment properties have had their properties titled in their LLC. They go and sell it. And next thing you know, the exchanger says, well, you got to put it back in your LLC. And a lot of times there's a gray area there, depending on the intermediary that you talk to. But a lot of times they want to do a thing called like as. LLC to LLC from entitlement. Joe Brown to Joe Brown entitlement. Okay. So you got to be careful. That's the first thing I ask when people say they're doing an exchange. How is it titled today? And a lot of times they have to go get it taken out of the LLC prior to selling it so they can go from Joe Brown to Joe Brown, because when I do that loan form, it has to be Joe Brown. Now that's pretty much true. A lot of lenders will agree with that, but sometimes if it's a single member LLC and that one person owns it, well, we're not arbitrators of the 1031 exchange. What we look for, as Aaron said, we look for your credit, how much money you make, and how much money you have. And the have is in the 1031 exchange. If the money's there, we're good. Okay. So we really are not a lot of lenders are arbitrators of 1031 exchanges. It's almost as if they look at the guidelines in the IRS and says, well, we got to do it this way. We're not like that. We're very user friendly when it comes to exchanges. Other than that, Maren says everything is in-house. It's a well-oiled machine. It works really well. Our average close time right now is at 26 to 32 days. Is that what it is, Aaron?
Yep. I was going to say 25 to 30. Yep.
Yeah.
That's really fast. That's really good.
Yeah. So, and the reserves there you can see, and it's pretty simple. You take what, and I'll just kind of put it in layman's terms. It says 2 to 4 houses. Let's say you have 4 houses. They're all $50,000 a piece. So that gives you a total aggregate of 200,000. Well, you have to have 2% of 200,000. What is that? $4,000 of reserves. And once again, those reserves can be in a 401k, and it stair steps as you go. So the reserve requirements are not that bad.
Right. How long is the reserves needs to be in place, Graham?
There's really no time period. I mean, we're going to validate it just like anything else. Where'd the money come from? Everything has a 60-day seasoning. And if all of a sudden, $200,000 falls out of the sky, well, where'd it come from? That's all we want to know. We're validators.
What I'm asking is, so the reserves need to be actually vetted from you guys, and you guys will actually grant a loan based upon those reserves. How long do you need to keep those reserves on an account or something of that nature?
Well, we want to see the reserves there in the account to the day of closing. If you want to withdraw them after that, I don't care.
Got it. Okay. So easy. Just to make it very simple for the investors, they do require in some cases reserves. And that can be up to $4,000 on a $2,000 house, which is usually 2% of the purchase price. But again, if you don't want to keep those reserves in place after you close, Graham is not going to ask you for a bank statement 30 days later, just to prove that you have more reserves. Of course, those are investment loans. Those are investment properties. So the bank wants to know that you are healthy enough financially that you will have money to pay for your mortgage, right? That's why they need to know what your financial status and situation is. But just to go through a whole process here, one more question that I had, and again, on the build to rent communities, for example, Ben Oaks is a 419 single family home. No problem financing those units, the single family homes.
Bring it.
All right, good.
So just bring it on.
Fannie and Freddie, do we qualify for Fannie and Freddie?
Yes, sir. All day long.
Also, I'm not an expert, but I know this. Quads. This is the largest number of doors you can actually acquire through a Fannie and Freddie loan, correct?
Correct.
And you guys can do that as well. So not a problem at all on any of the quads that we have coming up, Life.
Let's talk a little bit about the quads, because people that are, if they do the first time quad, they're kind of going, okay, the acquisition cost is much higher than the single family. Well, can I afford to get in there? Well, what we do, and most lenders will do this, some lenders don't, but when let's say they're doing one purchase at a time and they're buying a fourplex, and whatever the price is, it is what it is. But when we run the appraisal, Aaron will ask for a average market rent analysis. And if you say that thing's going to kick out $4,000 a month, 99% of the time, when the appraiser goes out and takes a look at that, he's going to come up with that very same number. But you're building a new build. There's nobody in the house. There's nobody in the place. We're still going to give you credit because the appraiser says this thing will rent for $4,000. So we're going to give you 75% of that. A lot of people kind of are real scared about that. How can I afford that? Well, yeah, if you're doing just this one, we'll give you the credit from the appraisal. So that's the same thing on single family.
I think that's such an important item that you touched on, because some people, they're afraid of actually moving into 4 doors. It says, no, I can only afford a single family home. And they're missing out on one of the biggest cash flowing assets they can actually have, which is a multifamily. We have one very near the World Equestrian Center in Ocala, Florida. And I went there to do some comps myself because I'm buying one. And it's actually renting for $2,200 a door. It's crazy. The World Equestrian Center invested $1.5 billion on this project, and it's absolutely beautiful. And when I went to do some rent comps, one door on a quad, $2,200. I'm like, oh my God, this is absolutely amazing. So as long as you have the comps and the rents, as Graham has says, the appraisal probably will be there, and we'll make sure that you guys, don't buy anything that doesn't appraise. We don't force you, we don't make you. If it doesn't appraise, you have an option. You can get your deposit back and not purchase the product. We'll figure out a way to make you happy.
Well, you're right, because you don't want the headache. We don't want the headache.
No.
So if you're out there advertising something that's not going to rent for what the market's going to rent for, that's just going to come back to haunt you. So I know you don't do that, so I don't worry about that.
Exactly. So, we want to sell something that you're going to come back for more, right? This is a long-term relationship for all of us here, for Aaron, for Graham, for myself. Guys, I went out of questions. I think you guys answered everything. I cannot thank you enough for being here today. We know how important this is for the clients. Without you guys, the mortgage lenders, the residential mortgage lenders, the investment lenders like you guys are, specialists for investors, we couldn't do what we do, right? Without the proper financing, none of the properties would make any sense, right? The returns will not be there without the right partners, without the right rates, without the right effort and timing to close. Going above and beyond with the 2-step appraisal process that we have been through, not requiring the CEO sometimes to close on a property and to fund. Graham, I have now, enough words to thank you enough for how kind you are to us and to our investors. Aaron, congratulations, such a young guy, very inspirational to be on your position, having a great mentor such as Graham. So, it's always great to do business with you guys. Do you have any final remarks, Aaron and Graham, that you want to tell our investors?
No, just give us a call. We'll talk, let you know what we think, and try to get you pre-qualified as soon as possible so you can get out there and start writing contracts.
Yeah. Thank you very much, everybody. I'm Wagner Nolasco from Build to Rent Direct. Today, we had the pleasure to have Graham and Aaron, both of them from Highlands Residential Mortgage and the Parham team. Thank you guys so much. I really appreciate the opportunity. Have an amazing day.
Thanks.
Thanks again, Wagner.
Thanks, guys.